Hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the cues and levels to watch out for on the Nifty. And we'll also get you some actionable trading strategies to navigate through the day. And we will also be answering getting your queries addressed by our experts. But before we get all that on board, let's take a look at what the headlines are looking like this morning. The stocks bounced back on Wall Street after key indices posted their worst weekly decline in months. In fact, the Nasdaq leads the surge ahead of the release of the inflation print for January. Asian markets opened higher as well. The SGX Nifty too indicates a higher start for the Indian market. Retail inflation shoots up to a 3-month high of 6.52% in January from December's one-year low of 5.72%. CPI surge sparks fears of another rate hike in April. And stocks in focus today are Nykaa, SAIL and Z. Also on the earnings front, Apollo Hospitals, Eicher Motors and ONGC will report their third quarter numbers today. Well, let's also get on board our technical expert for today. Joining us is Nilesh Jain of Centrum Broking. Good morning, Nilesh. Good to have you on the show. Well, it was a sea of red on the indices yesterday. In fact, we ended below that 17,800 mark. This morning, SGX Nifty is giving a flattish Q, but positive start for the Indian market. We saw quite a bit of a bounce back on Nasdaq. Do you expect IT stocks to stage a comeback? And what are the levels you will be watching out for on the Nifty today?
Very good morning to you, Nandita. Well, if you look at the overall structure of last couple of weeks, what we are witnessing is merely a consolidation. And good part is that the markets are certainly showing resilience as every dip is getting bought into. And the crucial support for the Nifty index is now placed at 70,600, followed by 70,500. In fact, there are multiple supports in line and in place. At the same time, there are multiple hurdles as well. If you look at the 100-day exponential moving average, which is coming around 70,950, and that's the level from where we have witnessed some sort of profit booking recently. The narrow range for the Nifty looks like 17,700 to 18,000. Currently, Nifty is at lower end of the range, so the risk and reward is definitely looking favorable for the long position. And I won't be surprised if we see 50 to 100 point up move in today's trading session. Looking at the last 4 to 5 trading sessions, we have witnessed a crucial support has been respected. So for the day, we are slightly on a positive side. We expect Nifty to surpass 17,800 and test 17,850 to 17,900 going forward. For the Bank Nifty as well, although we have seen some sort of profit booking in yesterday's trading session, but it has certainly respected its 41,000 psychological support mark. So overall, the structure looks sideways with slightly positive bias. IT sector definitely yesterday we have witnessed some sort of profit booking, but the structure looks like slightly on a positive side, and we can expect further momentum to continue in the Nifty and the IT index. Specifically, large cap space are looking positive. So watch out for the counters like TCS, Infosys, and CLTech. So these are the 3 specific stocks that we are liking from the IT space. Lastly, if you look at the volatility index India week, yesterday we saw a spike of 7%, but I think it is very much in the comfort zone and trading below 14 levels. As long as it trades below 16, the bulls are likely to have upper end in the market.
Well, so those are the levels to watch out for on the Nifty, Bank Nifty and of course the IT pack. Hold the thought, Nilesh, we'll come back to you, but let's shift focus to some macro data then. We had the inflation print come out late last evening, and inflation, in fact, Jan CPI has surged to a 3-month high of 6.52%. Now, this is vis-a-vis a 12-month low of 5.7% or thereabouts in December. Now, let me get in in fact, Moneycontrol's Latha Venkatesh to decode the numbers for us. Latha, ma'am, good to have you on the show. Well, from a 12-month low to a 3-month high, quite a shocker when it comes to inflation print.
Oh, absolutely. I mean, more than the 3-month high or the fact that it is above the Monetary Policy Committee's 2 to 6% range. They have to keep CPI within that. The shocker really is that on the street, the expectation was 6 or 6.1. That was the range. I mean, 6.52 in my reporting career, very rarely has inflation been so much higher than what the street was expecting. And what is worse, it's solely driven by food. Core inflation has come at 6.1. It was at 6.1 in December, and it is the RBI's perennial pain. In fact, all central bankers are complaining about the same thing, that core inflation, services inflation is not falling. But food, one was not prepared for this shocker. It was 4.19 in February. It is 5.94 in January. Look at the jump. and is entirely contributed by cereals. Cereals have risen 2.6% on the month. Year on year, the rise is 16.2%. And cereals is everyone's staple. So, you're hurting a large part of the population. It has a 12% weight in the CPI. So, cereals alone has taken the CPI to 6.5%. Now, this will make nonsense of all the forecasts. The RBI had brought down the forecast for April, Jan, Feb, March from earlier 5.9 to 5.6 because they saw the way prices were falling in November, December. Now you'll have to go back again to, that 5.8 or 5.9 figure for this quarter itself. As well, in subsequent quarters, this base will keep pushing. What is bad about cereals is it is unlike veggies. Veggies, you know that there are a couple of months in the year when you will pay 80 rupees for tomatoes, and there will be a couple of months when you will pay 20 rupees. It's cereals, that doesn't happen. Once it rises, it sticks for some time. So this is going to be bad for policymakers. Almost everyone is expecting the Reserve Bank is definitely going to hike in April.
Right, ma'am. RBI governor did surprise with his hawkish tone,
yes.
Because most of us were
He
expecting
knew something perhaps.
most of us were expecting that this would be the last hike. But as you are saying that another rate hike could be in the offing in the April policy. How would you say the road ahead lies for RBI now? Do you think the next 25 basis points will be the last one, or since they are data dependent, it will again depend on how the inflation print for the next few months pan out?
Oh, absolutely. It's going to be data dependent. It will also depend on how other central bankers react. It will very much depend on whether food prices can cool off. But it's possible that food prices rose because the free food was 10 kilos. If you remember, Anna Yojana 5 kilos, National Food Securities Act 5 kilos. In December, the Anna Yojana ended and the Food Security Act price, food became, zero. It was given free. Now, because of that, since you're getting only 5 kilos, you went out and bought for the remaining, and maybe that's why the food prices went up. There could be a whole lot of reasons, but immediately it looks like if you are an NBFC, if you're a bank, you are going to raise lending rates because you're expecting that rate hike to come. So bond yields will already start rising, and NBFCs will be borrowing more expensively. That will mean more expensive for real estate. Home loans go up. So this is going to be a bit of a macro issue, slowing down parts of growth in some areas, slowing down, loan-fueled, credit-fueled consumption is likely to come down in the economy. This is not going away too quickly.
Well, this is not going away too quickly, but another data point that we'll be watching out for is the US CPI data, which is expected to be announced later today. Any expectations there, ma'am?
Well, over there, the only fear is that if you looked at the Jain numbers, this is what we read in reports. We have hardly any idea what happens in the US. But what they are worried is that fuel was falling all of last year. Gasoline prices did not fall, but actually inched up in January. So there is a bit of a fear that the steady fall that we saw from nearly 10% to 9.1, 8.5, 8.2, 7.1, that steady fall may plateau for Jan. If there is any disappointment over there, then we are in bad shape. But the way the stocks went up yesterday ahead of the inflation number, it looks like someone is pretty confident that we will get a good inflation number.
Well, we will be watching out for that later tonight. Well, with that, thanks a lot for joining in and putting into perspective what this spike in inflation means for us back home. Well, moving back to Nilesh then. Nilesh, you shared your thoughts about IT stocks. Let's also talk about some of these new age tech companies. Nykaa reported its numbers yesterday. It saw a 70% drop in profit. There isn't much historical data to really go back to, but how does that look on the charts after its third quarter performance?
Well, post-listing, we have witnessed a continuous decline, a gradual decline can clearly be seen on the chart. And meanwhile, we have also witnessed some sort of a pullback in between. So recently, after testing the lows near about 125, we have witnessed a strong pullback. But I believe this pullback may not sustain at high levels. Although there are multiple supports now, 140 is the immediate support followed by 132. At the same time, on the higher side, it is important for Nykaa to surpass 160 mark on the higher side for any sort of short-term base formation. But I think those who are already holding the long position can keep a stop below 140 and wait for a breakout above 160. Post then we can expect further momentum towards 175 to 180. We are not expecting any major reversal on the chart, but yes, some pullback, what we are witnessing may continue.
Well, no major pullback expected when it comes to Nykaa. Let's also shift focus on Z. That company also reported its earnings yesterday, and we saw a drop in profits. In fact, profits dipped by somewhere around 90% on a YOY basis. Revenues also saw a drop on the back of lower advertisement business. If you look at the shares, I mean, they were under pressure yesterday, 3.5% down. In fact, over the last week as well, it has been under pressure. Do you expect more downside given the fact that numbers are unenthusing to say the least?
Well, if you look at the overall structure from last 3 to 4 years, the stock hasn't done well and it is merely consolidating. Although in between we saw some sort of a spike near about 350 to 380 sort of levels. And from there, we have seen some sort of profit booking and selling pressure. At the same time, there are multiple supports in Z Entertainment as well. The psychological support is placed at 200 mark. And as long as it trades above 200, we can expect a pullback from the current levels. So the idea is that those who are already holding the long position can continue to remain long. Well, one should avoid creating any sort of fresh long position at the current level. If somebody has a time horizon of more than 1 year, can definitely get into this particular counter. But from a short-term perspective, I think it's better to avoid.
Well, better to avoid Z Entertainment at current levels. The last stock on my list is SAIL. It hasn't reported a good set of numbers. Profits tanked over 60%. In fact, most of these metal names saw a pretty weakish quarter. If you look at the shares, I mean, they were down somewhere around 0.5% or thereabouts this week, and over the last 1 month, it is down somewhere around 5.5% or thereabouts. In fact, the entire metal basket has been under pressure over the last few weeks. What would you advise investors to do on this counter?
Well, from metal basket, I think Steel Authority is one of the underperformer along with National Aluminium. And these are the two specific counter where we have seen a lot of underperformance compared to the large cap and the other metal counters. Now, looking at the overall structure of the Steel Authority, recently we have witnessed some sort of a selling pressure from the high levels. 200 exponential moving average, which is currently placed near about 85 levels, along with the 50-day moving average, which is placed at the same level. So we need to wait and watch out for that particular level to be taken off on the higher side. The structure looks slightly sideways with negative bias. And I think if somebody wants to, look into metal space, better go with Hindalco and JSPL. Avoid Steel Authority for making any sort of counter bet on the long side. And keep a stop loss below 80 if you are already holding the long position. On the higher side, 85.5 is the immediate resistance. Post then, we can expect further momentum towards 90 to 95.
Well, in fact, we had a query from Saurabh Shirsagar, and he wanted to know whether this is the right time to enter metal stocks. Well, Saurabh, I hope this answers your question. These are the two counters that Nilesh has pointed out. Hindalco and JSPL are some of the stocks that you could look at, but you could avoid a sale after its downbeat quarterly performance. Let's also take up another query. This is coming in from Prabhu, and he has a query on South Indian Bank. Now, over the last 1 month, South Indian Bank has shed somewhere around 8 to 9% or thereabouts. What would you advise somebody who's been invested in this counter to do now going forward?
We have witnessed a good up move in the year 2022 from the levels of 7 to 8 rupees. It has gone to the levels of 21. And at 21, it has formed a double top sort of formation. But I think the consolidation that currently we are witnessing is a good consolidation. Once this particular consolidation gets over, we can expect another up move to continue on the higher side towards 21 on immediate basis. And post that from a position perspective, 23 to 26 sort of levels can be seen. Well, at the current level, I think it is better to stay put with a stop loss below 15.5. Although you have to keep in mind that you may have to wait for 1.5 years. Slightly from a longer term perspective, counter looks positive for a position target of 21 to 24.
Right, so hope that answers your query, Prabhu. The next query is coming in from Harshit Kumar, and he wants to know your views on Bajaj Finserv. He holds 25 shares at the rate of 14.95 a piece. Now the shares are trading at 13.85. He is making a fair bit of loss on this counter. Well, it did come under a fair bit of pressure in yesterday's session after a couple of days of being among the top Nifty gainers. Would you advise investors to buy this on dips going forward?
Certainly not. We have seen numbers which were certainly in line, and technical structure, even if you look at, we have seen a correction from the levels of 1800 to the levels of 1250. Although from the lower levels we have witnessed a pullback, but I think it is better to stick to the names like HDFC Limited, Chola Finance, and Mahindra Finance. These are the counters which are looking positive from this particular space. As far as Bajaj Finserv is concerned, unless and until if somebody has a time horizon of more than 1 year, then one can certainly stay put. From a trading perspective, I think there may be another leg on the lower side that cannot be ruled out. Looks slightly sluggish, and it is better to avoid. If you're already holding the long position, keep a stop loss below 1250. And this pullback that what we have witnessed from the current levels may continue towards 1450 to 1500. If at all it reaches 1500, that's a good level to exit to book profit.
Right. The next query is coming in from Rajiv, and he wants to know your views on KPIT Tech. Now, the shares were under pressure yesterday. They were down somewhere around 4% or thereabouts. But IT basket has been quite an outperformer when it comes to the sectoral indices. What is your view on this counter now, KPIT Tech?
Well, KPIT has been one of the outperformer in the IT space, specifically mid-cap IT space, that particular space, and this particular counter has been in an uptrend, and in this particular month as well, if you look at it, was up around 7.5%. Looks strong. Any decline can be a good opportunity to make a fresh entry. Already, if you're already holding the long position, can continue to remain long. On the higher side, immediate target can be 860 to 900. From a positional perspective, it looks like it is heading towards a four-figure mark of 1,000. At the current level, the risk and reward is not that much favorable. Wait for further decline towards 780 to 760. That could be a good entry point with a stop loss below 700.
Right. I want to move on to the realty basket now. We have a query from Harry Singh, and he wants to know your views on Godrej Properties. He wants to know whether it warrants an entry at this current juncture, or if somebody is holding the counter, is it time to exit? What would your view be on this one?
Well, I think at current level, it is not advisable to exit from the long position. The counter is forming a good base. It has formed a triple bottom sort of formation near about 1100 levels. And currently it is trading near about 1165. So at current level, I think the risk and reward looks favorable for the long position. We can expect a pullback to continue towards 1250 to 1300. Although the major trend is clearly not visible on the chart, it looks slightly sideways. But I think if somebody has a time horizon of more than 6 to 8 months, then certainly one can remain long and can be accumulated from a positional perspective for the upside target of 1250 to 1300 on immediate basis. 200-day exponential moving average resistance that comes around 1300. So we need a decisive breakout above 1300 for any sort of trend reversal. So stay put with a stop loss below 1100 and keep a target in the mind of 1250 to 1300.
Right. The last query for today is coming in from Funny PG, and he wants to know your views on Oil India. Now, the shares were quite buoyant in yesterday's session, rallied somewhere around 9% after a good set of numbers in the third quarter. When would you advise investors to get into this counter?
Well, the trend is no doubt looking positive, trading well above its 200 exponential moving average and also short-term 50-day moving average. The trend no doubt looks positive, and further momentum can continue towards 250 to 260. For fresh entry, I think one should wait for some sort of a decline towards 235 to 230 sort of zone and keep a stop loss below 210. From a positional perspective, I think it's a good counter to stay put for the upside target of 280 to 300 from next 6 to 8 months perspective.
Right, Nilesh. Well, this wraps up our query segment for today. But Nilesh, before I let you go, leave us with some stock recommendations for our viewers.
Right. So I have 2 buy recommendation, and both are looking extremely positive on the chart. Starting with the Titan, this particular counter has witnessed a good base formation, and yesterday we have seen a price and volume breakout. So this counter looks positive for immediate target of 2600. That's the immediate target that can be seen. From trading perspective, 2571 is our target. Keep a stop loss below 2490. And yesterday we have also witnessed good build-up on the long side in this particular counter. The other counter we are liking is from financial space, heavyweight HDFC Limited. In spite of the weakness in the market in last couple of trading sessions, this has been one of the outperformer and looks positive for 2770 to 2800 sort of levels on the high side. Keep a stop loss below 2665.
Well, HDFC and Titan are the 2 counters that Nilesh is recommending for this morning. With that, Nilesh, thanks a lot for taking out time and joining us this morning and sharing your thoughts with us. Well, with that, it's a wrap on this edition of Morning Trade. But don't go anywhere, because coming up next is Opening Bell. Stay tuned.